Good afternoon, everyone, and welcome to Active Trading, Getting Started with Futures. My name is Pat Mullaly, and I'm sitting in for John McNichol today. And he will be intermittently gone for a while. He's out on military duty. Thanks to John. A lot of thanks to John for that. But I will be sitting in occasionally for him, as will others, I'm assuming. It is the 6th month, the 20th day, 2018, so the 20th of June. We got another week or so, a little more than a week left in the month. And what a month it's been so far. Before we get rolling and discussing futures, though, let's get to our important information. And that is that everything that we're doing here is for educational purposes only, and not a recommendation of or an endorsement of any particular investment or investment strategy or style. Futures and futures options trading is speculative, not suitable for all investors, and since we're talking futures today, that's an important thing to understand. Now, there's going to be an application if you want to trade futures, and we'll go over that in a little bit. Remember that futures are different than a lot of other things you might invest in. Futures accounts are not protected by the SIPC or the SIPC, the Securities Investors Protection Corporation. So please remember that. Futures and futures options trading is a service provided by TD Ameritrade Futures and Forex LLC, and those privileges are subject to review and approval. We're going to discuss things such as looking at futures, but we might look at some technical analysis of futures. Other approaches, including fundamental analysis of the futures market, may assert very different views. Remember that past performance of any security or strategy does not guarantee future results or success. Probability analysis shown, should we talk probabilities on options or something like that? Remember, those are theoretical in nature and not a guarantee. Backtesting is an evaluation process that takes into account historical data. Remember, that's in the past, not indicative of the future. So that means that everything we do carries some kind of risk. All investing involves risk, including the risk of loss. Asset allocation diversification do not eliminate risks in experiencing investment losses. And we will possibly talk asset allocation during these. No soliciting, no photography, no recording, no rebroadcasting without any prior written consent from TD Ameritrade. So please remember that. A couple of other things to consider, and that is some things we have coming up. So Advanced Concepts Workshop, that's going to go on in San Diego starting the end of next week. So Friday, Saturday of next week in the San Diego Marriott. That'll be Mike Follett and Ken Rose. So learn advanced options concepts. It's what it's going to be about, really. And that should enhance, if you're thinking futures, that may be able to enhance some of your knowledge about options on futures as well. Also, Strategies for Growth workshop coming up after that, and that's in St. Louis at the Sheraton Clayton Plaza, and there's the address right there. Scott Thompson and Mike Follett again. So Strategies for Growth, that'll hit on some technical analysis. It'll also hit on touch on options as well. So usually a well-attended and a lot of fun and learning going on there. So please don't hesitate to join us with those. And coming up next after this is going to be Cameron May. He's going to be talking about, we have rotating subjects. Today's happens to be navigating student loans, and it probably, if you're depending on who you are, might be a very important thing to listen to. So that's coming up in a half hour after this session. So please remember that. All right, let's hop out there and discuss a few things. I'm going to go to the TD Ameritrade website, and we'll take a look at some things. So when we're talking about futures, TD Ameritrade Futures and Forex LLC, we offer, those offers for qualifying clients. That gives them the ability to trade lots of different things, over 60 products. We'll take a look at some of those. So I'll show you how a couple places to get to those today. And if you're interested in trading futures, we'll show you also how to apply for those futures contracts. And we'll also touch on the platform. We'll look at some platform things on the platform, on the Thinkorswim platform as well. So why do we want to do this? Well, we want to understand how futures products and what the futures products are available to use, what the fact that futures and options are trading is speculative. You'll learn about that, and you may decide it's not suitable for you as well as for all, so that's something that not only you take into account, but the brokerage, oftentimes brokerage will take into account, because not all clients qualify. So learning outcomes basically for today, besides looking at this website, are going to be understanding the basic of futures, what futures products are available, leverage those tools, and how to analyze futures. And we'll look at an example investment example trade in the class. So let's take a look here. And so how did I get here? Well, we on this particular page that we're looking at, we pulled up the futures, the TD Ameritrade account, and oftentimes it may open up to your account, but we're going to be in the trade tab, this green, dark green square here. And if we click on one of these tabs, it's going to give us the ability, if I hover over trade, to go to futures. Futures is over here on the right hand side. So let's go ahead and click on that. When we click on that, it's going to bring up this futures page. It says futures and Forex. Now Forex is foreign exchange or currencies. So futures oftentimes used for different asset allocations to diversify, lots of different things. But again, like we've said before, you have to be approved for that. To get that approval, come over here to the right hand side, and you'll see to trade futures you must apply for margin. You also have to apply for options approval. That gives you the tier 2 or higher. You may want to upgrade once you've completed your steps, though, and then they'll review it, and then after you're approved, you can launch into the Thinkorswim site and trade futures on the active trading site. Remember this: approval is not an automatic thing. It may take 2 to 3 days for that approval to occur. I'm going to scroll down a little bit here, and let's take a look at some of the things that to be considering. And it says access to more than 60 futures products, including stock indices, energies, interest rates, metals, currencies, and agriculture. So when we think about those things, we think about diversifying a portfolio. That might be something that somebody might consider. Now, to do that, I want to kind of a cautionary thing here. You probably need to be very well capitalized. In other words, you have to have an account that should be able to sustain the moves. It doesn't mean that futures, indices futures or anything like that are more volatile. They're just worth a lot of money, and so large losses can, just like with options and other things, can mount very rapidly. So want to make sure that you're qualified in knowing what they are, as well as qualified in having a large enough account, because people get they get caught up in the bright and shiny things, and that they say, wow, I could do this, and and if it goes this way I can make a lot of money. Well, if it goes the other way, you could lose a lot of money. So we'll talk about that as well. So but something perhaps to think about is how some money managers will use a managed futures account, or they'll manage a futures account, and they'll have different types of commodities and futures in there to give them some diversification, and maybe take some of the correlation out of what their portfolio typically looks with just the stock portfolio or something like that. We won't necessarily go into that, but that's some thoughts, something to think about here. Leverage here, control large investments. This is the important part. This is what I was trying to say a second ago. You're going to control a large investment with a relatively small amount of money. And you can do something big with a small amount. You can do a lot with a little bit, and you can. There's two sides to that coin. One side's good, one side's bad. You can also lose a lot with that leverage, and we'll talk about the different how you tell what the prices are, what the contracts, what the total amount of the contract is versus what you might be investing. It's called notional value, and we'll take a look at that. These things trade. Oftentimes, these will trade around the clock. And so that can give you some flexibility to respond when certain things happen. When we go back in time, not too far back, we can go back to the Brexit. And the Brexit was a surprise, and the markets reacted overnight in a negative way to that Brexit. Now, they came back the next day and started to rally. We look at the overnight action in the election, the last election here in the United States, and things happened in the futures market that, depending on which side you were on, could have made a big difference. So look at what's happening overnight. It may allow you to do some things that might benefit the risk in your portfolio. So remember that a gain or loss can occur, and one may be big, and the other one may be big as well. So when we say no day trading short sale restrictions, what does that mean? That's over here on the right. It means that when you trade stock and you move in and out of a stock inside of a day, you can only do that a certain amount of times before the regulations kick in if you're not capitalized well enough. In other words, with a stock account, you would need about $25,000. If you day trade, you open a trade, close it before the end of that day or before a 24-hour period. You do that 3 times in a week, you're going to be considered a pattern day trader. In futures, that isn't part of it. That does not fall under that regulation. So there's some leeway there as well, and as well as short selling. But we'll talk about that, and you'll learn more about that if you go to some of the other futures classes that John and some other folks will be teaching. All right. With that, let's scroll down a little bit further and take a look at what else we see here. And I'm going to show you another way to look at contracts. But this shows a few of the futures contracts out there. Scrolling down here, these are would probably be considered to be a few of the more liquid. When we say liquid, that means there's got to be a lot of volume for something to be liquid. A lot of futures contracts and commodity contracts can be very illiquid. You want to be very careful of that. You might be able to get in, but you might not be able to get out with in a more timely fashion. So the top one here is E-mini. So you're going to hear that term a lot, E-mini. Oftentimes when people say E-mini, it's almost a default that they think about the S&P 500. But the E-mini is not just relegated to the S&P 500. It's just a type of contract. It's a smaller contract. Years ago, pre-1998 or so, there were just the big contracts, and they were involved in a lot of money to trade those, and that didn't necessarily afford money managers the best money management tool, and that's what futures oftentimes in the S&P are used for as a way to manage money and to hedge and to arbitrage, do lots of different things. But then around 1998, 1999, they came out with a smaller contract. And these became the E-mini S&P became the most liquid futures contract out there. They trade a lot of contracts a day, and we'll take a look at that here in a minute. And then we have the NASDAQ E-mini NASDAQ. So it's just the mini contract of the NASDAQ 100. Crude oil, that's in the news right now. Obviously, crude has been a big part of the markets out there for a long time, and especially in the recent history, where over the last 10 years we've seen crude oil go to the highest highs and then back down into the lows. We've got the OPEC meetings that are started today. We'll have some kind of who knows what kind of a decision tomorrow. And then you can see natural gas, gold. So what do we see here? We see indexes, and we see energies. We see precious metals. We see currencies. We see bonds. And then we see agriculture down in here. So when we think about asset classes, and you think about how to maybe diversify through those asset classes, that's a lot what we have here. You've got the stock indexes, and you've got exposure to gold for whatever reason you might want to use gold to hedge against geopolitical issues, inflation, whatever your beliefs are. You can trade in the natural gas. So when we think about sector rotation, you think about intermarket analysis, you typically be looking at, in various ways, stocks, bonds, commodities, and currencies. And you can find all those right here with these futures offerings that are here. So let's pop out here to our active trader platform, Think or Swim. And let's take a look at what we have here. So one of the considerations that you might look at here is, how can I trade these? How do I know, what I want to trade, when I want to trade? What are my levels? So there's going to be technical analysis you can look at, fundamental analysis, and you might get from wherever you get that from. But here, let's take a look at something here. When I in here, if we look over here on the left-hand side, it says futures, and if I scroll down here, you can see the list goes on and on and on and on. Now, again, not all of these will be something that are appropriate. Not all of these will be as liquid as you might want them. But how did I find this futures contract? So here's a watch list. Pop down the future, or pop down that window, that tab, that says futures, and then we'll come down into all these different public ones. And if we put our cursor right here on %-F, so this is going to be anything where we have obviously percent changers and so on and so forth. These are in alphabetical order, so we'll pop down here to futures, left click on futures, and then it gives us all of these futures. Now you can build your own watch list, and a lot of people like to have the S&P futures. So this is that S&P E-mini future. That's a /ES, and the U and the 8, that denotes the 8 denotes a year, and the U denotes a month. This happens to be the September contract. So when we're in the indexes, these expire every quarter. That's right, I said the word expire. That's because these are contracts. Futures are a way to lock in a price out there in the future, and the reason this came about really came from commodity traders, people who were out there growing corn and wheat, and they might have had cattle, or they might have had hogs, and they wanted to make sure that they had a liquid market for those out there in the future. So futures came about. So what do futures do? What do these contracts do? Well, they're standardized, and they're standardized according to quality, quantity, delivery, time, and place. And the only real variable here is the price as it moves up and down. So using futures, there's a lot of different things you can do it, but the history of futures came from needing to have a way to sell your product in the market out there in time, and match up a contract with somebody. And now, when you do buy a future, when you sell a future, it's when we say contracts, people automatically think of options. Well, sort of. They do expire. They do have an end date, but options, in theory, are if you sell an option, in theory, you're obliged. If you buy an option, in theory, you have the right to exercise that option. And I say in theory because on options, if it's expiration day and you're in the money on something you bought in an option, well, you're going to suddenly be obligated. So here, though, it's a business type of a contract. It's a good faith agreement after a fashion between two parties, and that one saying, "I'll buy this from you," and they're obliged to buy it, and the other one says, "I'll sell it to you," and they're obliged to sell it, unless you terminate the contract prior to the delivery dates and a few other things. But you can always close these contracts out and not be obliged on that side. So a lot of people will use these for speculation. A lot of people will use these for hedgers. A hedger is usually doing something to hedge off the price risk out there in the future. So when we look at ESU8, so let's go over here to the Trade tab. I'm going to left click up here on the Trade tab, and the first thing we see here is ES. And that's in the symbol box. The reason it's in the symbol box is I have linked using this link box here, and I've linked that to the watch list over in here, so it pops up futures. So what do we see here? We see, well, the same thing we saw over here, ESU8, and that's the active contract. We want to be in the active contract. You want to be where the liquidity is. This is in the aftermarket. So right now in the aftermarket, there's 3,557 contracts. Bitcoin futures, probably that's about a day's volume on Bitcoin futures. We'll take a look at a chart here in a minute and look at some of the volume from today, the total volume from today, and see what that was all about. But up here you'll see it says active only, and it says spread single. If I left click and pop that, don't want to go to a counter spread, sorry. If we go to active only and click on that, you can see I've got some opportunities. So remember this, if you're new to this platform, anything that has a triangle in the corner of it, or there's some kind of triangle available in that tab, there's something behind it. So we click down here, and if I click on all, then it's going to show all the contract months out there. And what you'll see is that there's not a lot of volume overnight in the ESZ. So U is September, Z is December. How do we know that? Well, the easy way to do it is just go over here and look at the expiration. EXP stands for expiration month. And we can see 93 days out there until these expire. These expire on the expiration day is the third Friday of at the end of the quarter. So they expire at the end of every quarter, and then that's where you get these the idea behind what's called triple witching or quadruple witching. But the next one is 184 days out. So here's all the different months out here: September, December, March, June, and September. And if you think about how fiscal quarters end, first quarter of 2018 ended in March. We're coming up to the end of June, which means the second quarter is going to be ending, and that's why we're seeing the September contracts, because from June to September will be the third quarter, and that's going to expire at the in September. So that's how you would look at these and understand what these are all about, but try to stay in the active contract. So let's go over here to a chart, and I'll show you what I mean. First, before we do that, remember that the March contracts have an H in them. So I'm going to do some things to show you the difference in how liquidity changes in these contracts. So an H is a March contract. A 9 is 2019. So these are all out here in 2019. 2 quarters left here, 2018. The September, which is the U, the Decembers, which are the Z's. So let's go back over here to a chart, and let me collapse this active trader. And what I'm going to do is I'm going to come up here. This says /ES, and we can see this continuation chart. Now, if I change this to /ES H8, that's going to be the March contract that's expired. And what I want you to notice, let me bring this up here, and let me collapse this side over here. What I want you to notice is this volume in here. So this was the volume in the March contracts. They traded, well before December of, you can see that in the price area, but you can see that nobody really cared too much about the contract as far as liquidity goes. They cared, but the liquidity didn't pick up until we got, close to the into the December contracts, and then we started to see the volume really start to pick up. Now, of course, this was the February sell-off over in here, and we saw volumes pick up really to a large amount. If I put my cursor over there, we can see that if you look at the volume numbers over in here, put my cursor on that day right there, 3,900,000 contracts traded that day, and the next day 4,700,000. That's a lot of futures contracts. You look at soybeans, and soybeans are going to trade somewhere probably around 200,000 contracts. Even the Dow futures will be dwarfed. The liquidity, the volume will be dwarfed by those. So when we talk about sticking with liquidity, this is where we want to be on these. So now what you notice is that when we started getting through March, these started to the volume started to sell down. So if I put on the June contracts, the September contracts. So I'm going to put a U in here and hit U. We can see that these just started to come online. And we can see this volume picked up. This green line is the open interest. So futures contracts have open interest as well. The amount of contracts that are in force, sold, short, long, and that open interest starts to pick up as volume starts to pick up as we move into these September contracts. And that volume will stay fairly high until we get to that second, third week in September, and we'll start to see that open interest drop and that volume drop. So you have to be aware of where you are in time and the liquidity that's involved. Now, if I come up here and I put in let's go over to the trade tab, and we'll put in, say, /LBS. Now, these are lumber contracts, and we'll look at the current contract here, LBS in 8, and that's going to be the Julys that expire in 23 days or close out in 23 days. And we'll come back over in here and put in /LBS in 8. This is random length lumber. Now, when we look at this, we can see, wow, lumber's gotten pretty expensive, right? And we look at today's action, and we can see the volume today was 1,665 contracts. That's a pretty big day for lumber, and lumber's been kind of in the news, a lot of construction going on out there, but typically, 498 contracts, not a lot of contracts out there. So this is an illiquid, a very illiquid future, but you can get an idea using some of these other futures as to what is happening out there in the economy. If lumber is going up and the prices are continuing to head higher, then that might mean something to us. But let's go back to the ES real quick here. I've got just a few minutes. I'm going to put in /ES. I'm going to pop over here to the Active Trader tab. And in this Active Trader tab, there's several different things you can do here. And I'm going to show you how a simple way to put trades on, should you want to do it. You might be an intraday trader. You might use technical analysis. But you might say, hey, I want to buy a quantity of one. Where do we find that? If I click on this arrow, pop that down, says I want to buy or sell one contract, you're going to do that utilizing this this tab. And so what I'm going to do here, oops, didn't want to do that. Thought I just grabbed it in the right place. So where is it trading at? 27.7250. And let's move this over just a hopefully I'll be able to move it over a skosh. There we go. 27.7250 is where we're trading at right now. That's this bar right in here. And say we want to buy a contract and then close it out after a certain move. So what we can do here is say, well, once it moves up, oops, I'm going to click on this button and say once it moves up 5 points, I'm going to I want to put in a limit order to sell that and take a profit. If it drops $2, I want out, and then we can simply come over, and if you see, if I put my cursor on the bid, it's going to say buy limit. So we can come in here and left click there and check it out and say, well, I want to buy it at $22,750. I want to close it out for a profit on a limit order of $27,750, and then sell it for a small loss of $27,750. This would be kind of an intraday type trade, not something that everybody should be doing, but you can see, oh, it got rejected. That's because it was rejected because this account doesn't allow us to make any kinds of trades in it. But that's how easy it is to set that up and make your trade. All right, it is time for me to go. That's the basics. I should be back next week. We're going to continue on with this, learn a lot more about the platform, learn a lot more about options. Remember, please join Cameron May right now on navigating student loans. And also remember that there is always risk in the market, and everything we're doing here is for educational purposes only. Thank you very much. We will talk to you soon.